You are watching Market Watch, the brief overview of the key events from the world of finance. The title of today's issue sounds like the Federal Reserve, gold, and Bitcoin. At first glance, it may seem that there is little in common here, but pay attention to the following point. Everything didn't go according to the script. Let's start with the Federal Reserve. From about the middle of October, relevant experts began discussing the prospect of easing monetary policy. Closer to the middle of December, there was talk of 3 cuts in the key interest rate in 2024. But already this week, investors strongly doubted the readiness of the American regulator to reduce the key interest rate in March. As a result, the yield on U.S. government bonds increased slightly, supporting the U.S. currency and, as a result, pressure on the stock market and gold. As for gold, investors began to gradually return, despite the decrease in the likelihood of monetary policy easing by the Federal Reserve. At the same time, key U.S. stock indexes also turned green, indicating one of two things: either investors are ready to wait longer than until March, or the fact that the Fed will not raise rates enough to buy gold. Recall that it was the decrease in the yield of U.S. government bonds that allowed gold to resume growth from the lows reached at $1,824. Therefore, it is logical to assume that keeping the Fed's key interest rate at a high level should put noticeable pressure on precious metal quotes. Also, the cryptocurrency market is not moving in the previously set direction, which puts Bitcoin on a par with an unexpected decrease in the probability of a decrease in the key interest rate and an increase in the price of gold. Bitcoin has come under pressure from sellers as a significant part of the buyers of Bitcoin ETFs are sellers of Bitcoin trust company Grayscale. At the time of conversion to an ETF, this fund had assets under management worth more than $28 billion. But since the start of trading, there has been an outflow of funds in the amount of about $1.6 billion. Therefore, the net capital inflow is not as large as it might seem at first glance. And therefore, there is a risk of developing a deeper corrective wave of decline. At the same time, please note that there has been no global change in sentiment. The Fed is not talking about raising the key interest rate, but only about keeping it at the current level for a longer time. Gold has not overcome an important psychological support level, and therefore the bullish trend remains a priority. And only Bitcoin is still on the verge of developing a more powerful wave of sales. But even in this case, we are not talking about a global trend change, but only about the risk of a short-term decline. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.